In tonight's Business Insider, markets in the U.S. and Europe are showing resilience despite volatility in China. Stocks have plunged in the world's second largest economy to start 2016. For more, I'm joined by Jason Howell, President and Family Wealth Advisor at Jason Howell Company. Jason, let's start with a few notable sectors of the stock market. U.S. auto sales reached a new record in 2015, 17.5 million cars and light trucks, a nearly 6% increase. How did the market react?
Well, not too kindly, Morris, I suppose. It's less of a case of what have you done for me lately and more of a case of what will you do for me tomorrow. You know, investing in the stock market is in effect a bet on tomorrow's future. And analysts, and I will underscore analysts, don't quite believe that we can hit those records again or in fact do more than that. I'd caution folks to look at the fact that these are analysts, though, and say that, well, if analysts believe this, they are paid once a year, just like a lot of us are, or paid annually. If you're looking at this for your serious money that's for 10 or 20 years into the future, like your retirement, feel free to take another look at this and make your own decisions. Analysts are a lot like weathermen. They've got a hard job, but they're not 100% right. And when they're wrong, they leave us a little bit in the cold and a little bit wet.
And I watch one of the financial news channels all the time, and I should have learned my lesson, because at the end of the day, they say, all right, what's your top pick? What should we buy? They're wrong all the time. Now, you're also following plans for a major bond sale by brewer giant AnheuserBusch InBev. What are they trying to pull off?
Savings. In a word, savings. What most folks don't understand or realize is that when corporations put out a bond offering, what they're doing is a play for saving money. The interest on bonds is deductible. So a $30 billion offering is going to be a pretty huge deduction at a time when they're spending a lot of money to combine two huge firms. This is the second largest offering in history, second only to Verizon a few years ago in 2013. So they're hoping that people are still afraid of the market, that they're looking at the stock market and saying, man, I would like something really stable, and here are these bonds that are rated so very well, let me go there. They're betting on people in the U.S., investors in the U.S. buying those bonds, and investors around the world.
Now, meanwhile, the price of crude oil keeps slipping. Why is that having such a negative effect on the stock market? My 401k just can't get a break, and I know I'm speaking for a lot of people out there.
Well, it's more than a 401k. It's at the market, but it depends on whether you believe that's the only factor for the market and whether the oil prices are the determining reason that everything is moving around.
Well, the market interprets this as the world is slowing down, but that's not the case. There's just more out there. Iran's going to be coming online. This is a good thing for the economy.
It's always a good thing, as we said before, when you pay less than $2 a gallon in gas.
Right.
But you've got a lot of countries who are now in the game. Libya is coming online with their oil. Canada has been pretty aggressive. Our shale oil, we're in America, we do a really good job on being productive. So we're still getting oil out there and producing. The challenge that we see here is Saudi Arabia. They're looking at the markets and saying, man, we could typically just restrict the flow of oil, but if we do that, we're going to lose market share, and we've always had market share.
And then Iran will come back and get more market share. That's what they're worried about. So why does Wall Street view low oil prices as being a negative when it should be a positive?
It's a marker for a lot of folks. Low oil prices mean that perhaps countries aren't as interested, aren't as aggressive, aren't as wanting to create and manufacture as they were before.
True. 20
China's
years
a great
ago,
example.
that was the case. But now everybody's producing oil. They can't get that old thinking out of their mind. Anyway, speaking of
We're going to have to talk to them.
Yeah, I think so. The world lost a music icon this week. David Bowie died of cancer at the age of 69. Some of our viewers might be surprised to learn he was also a finance icon. Tell us more.
Sure. Yeah, David Bowie, I mean, what a vanguard in his industry, an industry that for himself he spanned over decades. And when in the world of finance, it's very similar. He was one of the first people to securitize his music, his royalties for his music. So there was a time when his manager owned about half of what he had as far as his songs. He said, well, my gosh, these are my babies. I'd like to have them back. And working with an advisor, he got these to be created into bonds and sold those bonds in the mid-90s at a perfect time when music was about to take a pretty huge turn into things like iTunes and digital. So it was good for him. He was able to get his music back, and he was able to prove to the industry that to the financial industry, that the music industry had legs right at the last moment. David Bowie, music, finance, who knew?
What a fascinating story. I didn't know that.
Yeah.
All right, Jason, the hysteria around tonight's Powerball drawing hit a fever pitch today. The jackpot reached $1.5 billion. Statistically, the chances of winning are about 1 in 300 million.
Sure.
So put this story into context for us. Are people simply throwing money down the drain here?
Well, it depends on what your calculator says, and I had to use the one on my phone to get this math because my Staples one just wouldn't do the numbers. And your chances are pretty small when you invest in the lottery, as it were. But if you divide that number into 0, we all know what that number is. It's 0. It's tiny. It's nothing. Let's look at the bright side. What if you won? What would you do if you won? What do I recommend? The first thing you should do is absolutely nothing. The second thing is make a list of everything that you want. Make it a long list, and even after the car and the island and the plane, you'll still have about $500 million to preserve, protect, and distribute to your heirs. And you're going to have a lot of boring meetings to figure out how to do that. But the point is, it's a good thing if you can get out there and do something for yourself, but know that there will be challenges even in those winnings.
You'll meet a lot of friends you didn't know you had.
Perhaps.
Jason Howell, President and Family Wealth Advisor at the Jason Howell Company. Thanks.
Thank you.